again, I think you're a great long-term thinker. I'm not, especially. I've been a bad short-term thinker on this one of late.
Traditional auto is getting smoked right now when it comes to EVs. Ford, they break it out. They lose 40% in their EV division. Polestar, half owned by Volvo, 45%. Tesla makes about 15% operating margin. The end point is clear in my mind. Gas cars are going away. And ultimately, I think that what is most optimistic is the other players that are trying to grab this massive TAM. It's as big as it gets. The other players, I think, are going to struggle with profitability to get there.
Well, all aboard the Tesla earnings hype train. Depending on when you're watching this, earnings will be reported in a matter of hours, or maybe it's already happened. In this video, a long-term Tesla bear admits he's not much of a long-term thinker. Quite the moment of honesty. Everybody's favorite method actor and the laughing stock of Wall Street has a few more thoughts that totally make sense, and more hype around Tesla's Cybertruck. And as always, I'll be sharing my thoughts, highlights, and a recap of Tesla earnings a few hours after the event. And quick heads up to my Patreon supporters, stay tuned because I'm about to drop a new file on Patreon available to everybody, all supporters at all levels, containing my complete health, energy, sleep, exercise, supplements, and productivity protocol. It's an Excel file, tabs on each of these different categories, plus a little bit of an overview video as well. If you're somebody who likes to feel and perform your best, check it out. And if not, I mean, hey, you do you. You can join Patreon with the link in the pinned comment.
Gene, I have to warn you, we've got some bears specifically on Tesla on this desk tonight, so I hope you don't feel outnumbered by us bringing you into the fold here. But lay out, what are we expecting for the quarter? And how is Tesla going to justify where it's at right now, stock-wise?
So there's the near term, which is tomorrow, and then there's the long term. And as far as the near term, I don't know if the stock is going to be up or down after they report their earnings. The key topic, obviously, for earnings is going to be auto gross margins ex credits. In the March quarter, the street was looking for 20%. They missed it. They hit 19%. The street's looking for 18% this quarter. I suspect it's going to be light, somewhere between 17 and 18%. I don't think that's going to be an issue for the stock ultimately, because I think the commentary from the CFO is going to be to expect improving gross margins throughout the back half of the year. And so I just kind of put that as the starting point. I think all systems go when it comes to improving margins, despite what probably is going to be a miss for June. The outlook is positive. But I would love for the conversation, the debate, to be focused on the long term, because I think that's what's more important, Melissa. And ultimately, I think the long term, if we're going to boil the question down, it's not about auto gross margins ex credits. The long-term question is this: can Tesla get to 10 or 20% market share of where eventually EVs will be 100%? And I will make the case that if their goal is for 20% share, if they do 10% share in a decade, so it's a long time, but 10% in a decade, that's a $1.1 trillion business. They are going to do $130 billion in revenue this year. If you're of the camp that traditional auto is going to catch up to Tesla, then I'd love to have a debate around that topic.
Hey, Gene, it's Dan. And again, I think you're a great long-term thinker. I'm not, especially. I've been a bad short-term thinker on this one of late.
Wow. I mean, I've got to give some credit to Dan here. He's called himself out, honestly and accurately. He's not a great long-term thinker, especially when it comes to Tesla. I don't know if he's a great thinker in general. I've only ever seen him talk about Tesla, and on that one very small sample size, something definitely broken in that guy's head, at least when it comes to understanding Tesla. So I've got to give credit. Dan has called himself out. Honesty. I appreciate it. We're making progress here. Remember a while ago it was Tim? You still short Tim, that guy? Finally, the penny dropped maybe a year and a half ago. He finally got it. He probably switched. I think he's now long Tesla. At least he ain't short anymore. I think Dan's going to be the last penny to drop. I think this may be the beginning of Dan finally figuring it the fuck out. I look forward to seeing how his thoughts evolve over the coming months, quarters, and years.
But it's interesting when you think about the short term right here. Into last quarter, the stock had sold off 16%. They missed on gross margins. The stock sold off the next day 10%. It has since rallied since bottoming out post earnings 100%. It's gained $450 billion in market capitalization since it was at 150 in the days after earnings. So when you think about the fact that they're likely to come in a 17% gross margin, who knows, whatever they say on the call, whether that's true or not, whether they're bottoming out or not, there is a price war going on right now. And so to me, in the history of tech, and you and I have talked about this a lot over the last 25 years, when you have declining margins like this in a market like this where, you know, there's just aggressive pricing, the more units they sell, it's worse for the margin here. So I'm just curious, like, how do you square like the near term right now with your very positive long-term vision? Because the fundamentals don't seem to be improving quarter over quarter.
So I would square it up by saying I think margins are going to improve in the back half of the year. And if I'm wrong by a quarter, it's going to likely improve in 2024. And the reason is that they are ramping production at Austin, their 4680 battery, which has been a drag on margins. We've talked about lithium prices going down. That benefits Tesla more than it benefits Ford and Giga Berlin. And so that's my base case. Agree that facts are the facts. Margins have been down, but I think that they will rally back here, back half of this year into next year. And as far as the margins and the impact, I think this is a critical topic, which is traditional auto is getting smoked right now when it comes to EVs. Ford, they break it out. They lose 40% in their EV division. Polestar, half owned by Volvo, 45%. Tesla makes about 15% operating margin.
This is an incredibly important point, one the vast majority of Tesla bears seem to either A, be oblivious to, B, incapable of understanding, or C, some combination thereof. Tesla doesn't exist in a bubble. Economically speaking, the shit is currently hitting the fan, interest rates through the roof, legitimate recession fears, auto loans through the roof because of interest rates moving higher, and as we know, the automotive market is extremely tied to consumer sentiment. If consumers are like, oh geez, I don't know what's happening with the economy, I might lose my job, my mortgage payment's going up and so on, they're less likely to buy a big ticket item. And many consumers now simply can't get an automotive loan. It's important to be able to zoom out and go, okay, what's happening to the overall automotive market? Tesla's margins are down a little bit. They've been aggressive with pricing to keep moving through all of their production. If you're a short-sighted Tesla bear, you see Tesla margins declining a minimal amount quarter over quarter and go, oh, look, the margins are going the wrong way. It's the end of the world. Huh. But if you zoom out a little bit, as Gene's mentioning, what about all of the other automotive manufacturers who are attempting to sell electric vehicles in the same global marketplace as Tesla? Ford losing 40%. As in negative 40% margins on their electric vehicles. Polestar, 45% or so, according to Gene Munster. And now that we've zoomed out a little bit and recognized, hang on, so Tesla's actually making a significant profit on every vehicle sold, while other companies trying to compete in the same market globally, selling electric vehicles, are losing insane amounts of money. Should I be concerned about Tesla, or should I understand, wait, if other companies are losing insane money and Tesla's making money, does that not give Tesla an incredible advantage? Spoiler alert, yes it does. More to the point, in difficult economic times, a company like Tesla, with a huge cost advantage, stands to gain market share, to gain ground over the so-called competition. Electric vehicles are the future, and there's only one company producing them very profitably at scale. That's Tesla. I often hear the example of BYD, who are also producing a lot of electric vehicles, although they do tend to claim that their internal combustion engine vehicles with a tiny little battery in them are also EVs. They're not. The problem is BYD is making a fraction of the profit per vehicle sold that Tesla is. So let's do a thought experiment. If hypothetically speaking, the automotive market remains in dire situation for a little while, there's a lot less consumer demand, people are putting off these big ticket items. If companies that don't have a very healthy profit margin are forced to reduce prices to keep moving through production, a company like BYD can very quickly go from making a very small profit per vehicle sold to losing a small or even large amount of money per vehicle sold to keep moving through production. This is one of those examples of missing the forest for the trees. If you look at Tesla in isolation and ignore what's happening to the global economy, the wider automotive market, and all of Tesla's so-called competition, you can fool yourself into thinking that things don't look very bright for Tesla over the very near term. But you've got to look at things from a zoomed out perspective. And when you do that, you realize Tesla's making industry-leading profit margins 2, 3, 4 times as much as other automotive companies. They've got insane pricing power, crazy scale, they're growing faster than any other company, and consumers cannot get enough of their products. They win on everything. Technology, safety, software, you name it, Tesla wins. It's a very rare situation, but it's a fact. Tesla's dominating on everything that matters, from a consumer point of view, from a product point of view, and behind the scenes from a business point of view. When you think about the broader implications, it's pretty clear. As I've said in the past, Tesla has won the decade. Many folks right now, Dan included, who has just admitted he has a very poor track record and he is not a good long-term thinker, are getting stuck in the short term. Well, Tesla's gross automotive margins could be 17% this quarter, as opposed to Ford's negative 40%, but they're not understanding all the moving parts. They're missing the forest for the trees. And I would once again like to point out Tesla's gross automotive margins over the next few quarters, I couldn't give a fuck. While all eyes, especially those of very short-term thinkers, are on Tesla's gross auto margins in the near term, some folks are looking at Tesla's unassailable data lead when it comes to solving autonomy. Their existing fleet now of, I don't know, call it 4.5 million potential robotaxis already on roads, continuing to collect data that in the future, with the software update, can immediately start picking up and dropping off passengers, and Tesla takes a cut of all those fares. I think this is where long-term investors should be focused. I have a funny feeling assuming Tesla does solve autonomy, the robotaxis awaken and they start printing incredible amounts of money, everyone's going to forget what gross automotive margins were for a few quarters in 2023.
My case is this. What you just described, Dan, that's going to be the world of traditional auto. I think they're going to continue to have struggles to improve those margins because it's not just about ramping production. They have to redo their factories, rework their labor contracts, redo their software stack, change their distribution network. They have to start to adopt a more nimble, profitable playbook. And so I agree, margins go down, bad for the business. My bet is a year, 2, 5 years from now, we're going to be talking about big traditional auto that is going to be a fraction of the size that they are today. Just look at what's happening with Toyota today. I think it is a tale of what's to come.
Gene, Danny Moses here. The only reason I totally agree with you that the only reason to own the stock here is that you think that in the out years, all these things will come to fruition as far as market share and being able to produce these many cars. But to Dan's point, it hasn't been a supply problem. It was a demand problem, at least nearer term, cutting price to do that. Until I see these things which have been promised for years, FSD at the right level, whatever level that would be, or all these other things that are supposed to be on the come, I still see it as an auto company. Maybe that's naive. And I'm still trying to figure out how we went from $110 per share here to kind of $280 to $290 on what has been happening. Yes, there's AI. It's always been a part of Tesla. AI has been. So I'm trying to figure out where were all the screaming bulls, because it feels like they kind of went away when stock was drifting below 150.
Could anyone think of any Tesla bulls who didn't go away when Tesla stock was below 150? Anyone who continued buying and pointing out best risk adjusted, that whole, neither can I.
What is the reason the stock you think has rallied here from 105, let's say, to 290?
I think it's an understanding that that they are recapturing that sales dipped and they've rebounded. The June quarter deliveries up 83% year over year. The overall EV industry up 50%. I mean, they had a great June quarter, and I think that's part of the reason why you had the rebound here. But I want to see the Tesla bear bull debate is great. I love the topic. I think ultimately, let's just quickly base it on maybe an agreement or we'll share something. Are electric cars going to be the future? And I would guess that most of the desks there would say electric cars will be the future. I'm okay if demand slips for a quarter or 2 or 4 quarters, because the end point is clear in my mind. Gas cars are going away. And ultimately, I think that what is most optimistic is the other players that are trying to grab this massive TAM. It's as big as it gets. The other players, I think, are going to struggle with profitability to get there.
Completely agree. As I've said, most companies currently producing vehicles, whether it's an EV startup or a legacy automotive company, will be bankrupt before the end of this decade. And those few survivors, if they're lucky, will be barely making any money at all. If that's the case, it seems pretty clear to me that Tesla's going to have insane profit margins, not just on the hardware, which I do believe over time will march to 30+% gross auto margins alone over the long term. But there's the whole autonomy thing, the robo-taxis, the money printer of money printers, a decatrillion-dollar opportunity. Now, call me crazy, but I think it's preferable to be printing insane amounts of money, have highly profitable hardware, and ludicrous profits coming in from software, having solved autonomy, operating a robo-taxi network globally. I think that's preferable to maybe making a low volume of electric vehicles with razor-thin profits and no autonomy, which is what just about every company other than Tesla in the automotive industry is facing in the best case scenario.
So that's why I'm okay. There's not like mental gymnastics around Optimus Prime or their solar roof or their lithium refinery that needs for me to get more to think that the stock's going higher. This is just very simple. The world's going to electric. Tesla has a competitive advantage around profitability. If you don't get profitable out of traditional auto, they got problems, and I think that's the opportunity.
Yesterday, we led the show with Ford cutting the price of its F-150 Lightning. Clearly, they're cutting the price because they need to entice buyers to a truck that may or may not be selling well, and the stock fell. So it's like, they cut the price, bad news, stock goes down. Tesla cuts the price. People say, good news, the price is now lower, let's buy Tesla. It is, you have to admit that even as a bull, it's a little weird that the story is like, this side bad, that side good.
I admit it is a little weird, unless you A, have a brain, B, have all the information, and C, use your brain to comprehend said information, such as Ford have publicly disclosed they're losing about 40% on every electric vehicle sold. They can't afford to be cutting prices by $10,000. That's probably another 15+% loss on margin on electric vehicles sold for the F-150 Lightning, when companies like Tesla are making almost 20%. Tesla has a public stated plan of driving the cost of EVs down so people can afford them, so they can make more and sell more. I mean, it's pretty simple, but that's what it boils down to. Drive the cost down, pass on the cost savings, execute, get to 20 million vehicles per year. Tesla cutting prices is in line with their mission. It's a signal that they have pricing power, that they're on track to reach their goal of 20 million vehicles produced per year. And while cutting prices, they're still making more money, 2-3 times the profit of most other automotive companies. Yet when a company like Ford is slashing their F-150 Lightning by $10,000, when they're already losing 40% on every electric vehicle sold on average, it's understandable the market might react a little bit differently. Ford are cutting prices on a catastrophically unprofitable vehicle by a significant amount, not from a place of strength or power or dominance, but out of panic and fear. Legitimate, by the way. They should be scared and they should be panicking. It is to be expected that on average, the price for every Tesla vehicle in their product lineup over time will continue to decline. They'll cut prices every time there's an opportunity, pass those savings on. They have a lot of wiggle room. If the shit's hitting the fan like it is currently, with economic uncertainty, recession fears, interest rates through the roof and so on, Tesla has the advantage of continuing to produce as many vehicles as they possibly can, adjust pricing till they reach the market clearing price, and sell through 100% of their ever-increasing production. Meanwhile, a company like Ford, who is still trying to ramp up their F-150 Lightning production volumes, they're barely making any at this point in time, for them to be cutting prices by $10,000, this is a very bad sign that they're going to have mounting losses and that the current extremely unprofitable price points aren't enough to move production. This is bad news for Ford. Again, per my earlier comments in this video, it's important to be able to zoom out. This is why it's important to have all the information and a brain and use the brain to understand the information. Otherwise, you might mislead or fool yourself, misinterpret the facts. If there were other companies producing similar numbers of electric vehicles to Tesla for equivalent profits, and it was only Tesla cutting prices, could be a different story. But that's not the situation we find ourselves in. Outside of China, Tesla's the only company making any money on electric vehicles, and even in China, most of the companies, even the high volume companies like BYD, are barely making any money per electric vehicle sold. Last I recall, Tesla's making like 6, 7, 8 times as much profit per electric vehicle sold as BYD.
But Brian, on that point, if you look at Farley and Ford, I mean, their backs against the wall. They're held to a different standard relative to what they're losing on every F-150 that they're making. The reason they're cutting prices is because they hear the footsteps of Cybertruck coming this fall, as well as with Rivian.
Dan Ives has absolutely nailed it. He's right. Ford are cutting prices from a place of fear and panic. Legitimate, reasonable fear and panic. It's a bit of a stretch to think it's just a coincidence that just after Tesla announces the first production Cybertruck has rolled off lines in Austin, Texas, that Ford announces a $10,000 price cut on the F-150 electric Lightning.
And Tesla right now, it's their world. Everyone else is paying rent relative to scale, relative to what we see on batteries. And that's why, look, I just believe this is what I view as Apple 2008, 2009, relative to the broader Tesla story.
Their margins in Q2 of last year were 29%. They're going to be roughly 17 to 18% in Q2 of this year. That's a massive decline. Their market share in China has went from 30% to 11%. It dropped 2 percentage points in 2Q. Their market share in Europe down from 30% to basically 15%. They're actually losing market share in the US too. So they're getting, when he says it's Tesla's world and everybody else is in it, listen, Tesla's used car prices over the past year are down 35%. Fords are down 1%. GMs are up 1%. What would happen if Ford and GM cut their prices 35%? They would crush Tesla.
In a parallel universe, there's a method actor who goes by the exact same name, Gordon Johnson, who has a legitimate research firm called GLJ Research, who also is a Tesla perma-bear. Of course, that's not in this universe. It's a parallel universe we're talking about. And in this parallel universe, almost exactly what's going on in this universe is happening over there. And that puts the poor method actor known as Gordon Johnson in this parallel universe in a very awkward position. Things are so bullish for Tesla and so dire for Tesla's so-called competition. The poor guy's really grasping at straws. Apparently, if Government Motors and Ford were to slash their prices by, did he say 35%? They'd crush Tesla. Just one problem. Remember how Ford's losing 40% per EV sold? They cut their prices by another 35% and they're already losing 40%. Do the math. The only thing they'll be crushing is their ability to stay in business for more than a few quarters. You can't sustain those kind of losses. Can you imagine you're selling a vehicle for like $80,000 and it costs you $140,000 to produce or $120,000 to produce? Playing the role of a Tesla bear is getting increasingly more difficult and just straight up absurd. Of course, the Gordon Johnson in this universe is actually legitimately a Tesla bear, and he believes what he's saying, and his arguments all make a lot of sense.
Listen, this is a company that benefited from a temporary shortage of parts that is now correcting, and as a result, they're having to cut their prices, and their margins are going back down to a steady state level.
Yeah. Tesla gearing up for second quarter earnings tomorrow after the bell. The stock skyrocketing more than 55% in the last 3 months. Here with the top things to watch, we want to bring in Yahoo Finance's Pras Subramanian. Pras, you got your eye on 3 things that we need to be looking for in this report tomorrow. What are they?
Yeah, so 3 things I'm watching here, and Analyst, of course, is first off, gross margin trough, the Cybertruck, and also expansion of the factory. So let's start off with the margin trough here. So a lot of analysts believe that this quarter might be the low point in terms of Tesla's margin, which have been the envy of the industry. They hit around 19% automotive gross margin last quarter. So people expected to dip again in Q2, but then possibly rise later in the year. Hopefully, for investors, they'll hear whether Tesla indicates that is the case.
Now, call me crazy, but I'm actually a lot more interested in updates on autonomy, FSD beta, rollout internationally, how many users, how many miles, and so on. Of course, there will be a lot of focus on margins over the short term, that thing that people won't remember in a few years when Tesla solved autonomy. But hey, as for margins bottoming out, probably this quarter, maybe next quarter. Worst case, early next year, they start moving higher. But this is all a temporary blip on the radar.
Secondly, Cybertruck. So over the weekend, we saw that Tesla tweeted out a picture of that Cybertruck, and that first one produced out of the Giga Austin facility. That's a big deal because, Tesla was sort of 2 years late in bringing that truck on. But right now, it seems like they are actually starting to produce in low quantities. Let's see what they say in the earnings statement and possibly in the call after. Is this just a pre-verification build? Is this truck actually going to be delivered to a customer? We'll see about that. And finally, expansion, right? So Tesla here, they probably have around 2 million, 2.5 million of vehicle capacity right now. They want to hit 20 million by the end of the decade. That's going to mean more factories. So Tesla's been talking recently. We've seen them in France and India talking about expansion there, or just doing some sort of operational activity there. And then also, the Journal reported yesterday that Tesla wants to expand Giga Berlin by double, to increase that capacity by double. So we'll hopefully hear more about their long-term plans on how they plan to build up to 20 million vehicles by the end of the decade.
So regarding new factory announcements and or production capacity expansion, I wouldn't hold your breath on this. We are likely to get updates from Tesla sometime in the next 6, 9, maybe 12 months. Might happen this quarter. But keep in mind, we've only just heard about the Gigafactory in Mexico. There's obviously a lot of stuff happening behind the scenes, but I wouldn't hold your breath on this. That being said, it is always worth paying attention to Tesla's installed production capacity table in the quarterly report on screen now from Q1 2023. There is a very important caveat. It's called the greater than symbol. A lot of people, I don't know why this is a thing, but don't understand what that symbol means and assume that symbol means exactly, not greater than. For example, Tesla's actual production capacity of Model S and X in Fremont, California is 100,000 units per year. For the Model 3 and Y, it is 550,000 units per year. However, you might notice that Shanghai is currently listed with Model 3 and Y combined capacity of greater than 750,000 units per year. But we've seen months of production in Shanghai that at an annualized rate were about 1.125 million units. About 50% higher than the stated greater than amount. That's a lot. The point I'm making, if you see any numbers listed in Tesla's installed annual vehicle capacity that have a greater than symbol, assume that the actual capacity is greater than, possibly by a considerable amount, than the actual number listed. This is some next level sandbagging from Tesla.
Pras, going back to the Cybertruck, I mean, yes, there's a lot of excitement around this delivery event that's supposed to happen this fall, but the initial announcement was made back in 2019, right? Did I get my years right? 2019. If you think about where the EV truck competition is right now, who are they going for? Who's likely to go for the Tesla? How can they compete when other competitors have already come online with their cars?
That's a really good question. I think that the Cybertruck kind of occupies its own space in between the F-150 Lightning, which is a work truck, and something of an adventure truck, mostly a work truck type of everyday kind of vehicle. And then the Rivian, which is purely, in my opinion, hardcore adventure people going out, overlanding, camping, all that stuff that coastal types of people will do. I think that Cybertruck occupies that middle ground where it can actually be used for both work truck type of activities, but also lifestyle and sort of the adventure travel set there.
Once again, I've got to give credit to Praz. It's not the first time and it won't be the last. He actually understands Tesla, we just noted. Praz correctly identifies the fact that the Cybertruck can actually do pickup truck things. A lot of folks seem to be unaware of this. Looks different, therefore it can't. Too much thinking involved to actually determine whether or not it can do the same thing, so let's dismiss it based on appearance. But Praz has just said it'll do work stuff. It's also great for lifestyle buyers. He's right. One of the few folks in the finance media who seems to get Tesla, and on Yahoo Finance may in fact be the only person on the entire network who gets Tesla.
I think that's where the Tesla kind of Cybertruck occupies that space. And we saw Ford sort of reacting here maybe to news that Tesla was bringing out this Cybertruck in possibly limited fashion this quarter with those deep price cuts of the F-150 Lightning just yesterday. I'm not saying that's because of that, but it could be. It's not coincidental that both of these things happened in the last 2 days.
Yeah, the competition certainly is heating up in the electric pickup space. I'm with Akiko, though. I don't know who the heck is going to be buying this Cybertruck. I'm not sold. I feel like the design's just way too futuristic for me, but we'll see.
And that could not have ended better. Moments after, I'm pointing out Praz gets it. His colleagues on Yahoo Finance universally, no idea. And we have that. Perhaps she's unaware. I'm just kidding. Of course she's unaware of the 1.5 million current reservations for the Cybertruck. It certainly appears, based on the 1.5 million reservations for the Cybertruck, that there are some people out there who are interested in buying the Cybertruck. So stay tuned. I'll be covering Tesla earnings tomorrow after the call, sharing my highlights and a bit of a recap. It's also going to be interesting to see how Tesla stock reacts after hours. As I record this, Tesla stock year to date up over 150%, closed at just over $293 per share. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.